So in that sense, in that context, the range for the market remains 16,950 on the downside. 17,300 first and then 17,400, round numbers on the upside. And what's worked is you buy at the lower end of this particular range at about 16,950 and you get out at about 17,300 or 17,400 or so. And we are kind of somewhere in the middle of that range at 17,200 right now. IT and banks have done well. IT index continued its third week of gains last week. It's up 7%, by the way, in 3 weeks. Banks have done well. But, with IT, the debate has continued because there are banks as a consensus overweight and numbers are bearing through. But IT, you look at Tata Elxsi, which reported numbers for the second quarter. Rima was telling us how for almost 2-3 years, Tata Elxsi has delivered absolutely strong numbers, but it's missed expectations. There have been project deferrals, etc., and we'll talk more about that. So these are missed expectations for the first time in 2 years. Margins are under pressure as well. I think it kind of will feed into the debate of the ongoing debate of IT, whether growth as it slows down in the US, and it's not slowed down yet, will impact the fortunes for IT services companies. So we'll see. Banks is a more clear-cut kind of a thing. It's also, the problem there is it's consensus buy. I mean, if you talk to local mutual funds, domestic market participants, they're all completely invested. So you need FIIs to buy, come in and buy these banks. They were big owners of this sector earlier. That's just a quick setup. As Sonia also said, the range is very much intact. It's about 300-400 odd points. It's a tight one, but so far we've been bang in the middle of that range. 100-point cut, not even 1%, and I think we could live with that if we start there and kind of hover around that after the big fall that we saw on Friday. Nigel, what are you watching?
Well, morning, guys. Actually, if we get a cut like that, I think it's giving a good entry opportunity for the bulls. And I say this because it appears the Indian markets, they preempted this weak handover that we saw from the US markets. The Nifty came off 150 points from the peak. You had the Nifty Bank that came up close to around 250 points from the day's peak. So not such a bad outcome, given that we've already corrected a goodish bit in the final hour of trade on Friday. And there was no shorting actually on Nifty futures. There was some unwinding of long positions that we did see. The Nifty Bank, that's been the go-to sector. And in fact, today it'll get some bit of support because HDFC Bank, well, the numbers looked pretty good actually. And also on a closing basis, it conquered the 20 as well as the 50 DMA, which is encouraging. We're likely to start off below those levels, but you're likely to see some bit of buying or, post a bit of a downtake. What do the institutions do? And that was the encouraging part, because the DI buying, it outweighed the FI selling. And in fact, institutions, they were net buyers to the tune of around 600 crores. The previous 5 sessions, well, on an average, the sell number was close to around 1,050 crores. What did the FIs do in the F&O market, though? They added some mild long positions and they covered close to around 18,000 short contracts. And all through of last week, the short positioning from around 85%, that's come down to around 77%. If the markets can consolidate for a bit or maybe get a bit of a positive trigger, then you'd like that short position to come down, which will easily take us up a couple of 100 points going by how net short they are. On the index options front, well, they bought calls. The problem is they continue to write calls as well. So that's not giving you any kind of directional call. Dollar index, well, one would have imagined it would be back at those fresh highs, given the kind of data points that we're getting. But that's still holding at around 113 on, which is encouraging from an emerging market perspective like ours. And Brent crude prices as well moving to around $90 per barrel when it threatened to go to around $100 per barrel. So what's the range? 16,950, that's been the buy zone, the last few days. So that continues to be the lower end of the range. On the upper end, if we can get past the 17,350, which we visited on Friday, that's going to be a bit of a resistance zone. If we break this level, either we go to 17,700 or we go to around 16,500. And going with all the data points and the outperformance that we're talking about, I'm leaning towards a bit of an up move if we hold on to that 16,950, 20 DMA on the Nifty.